Now let's move on to the market, starting with the BRVM. The BRVM 10 index closed trading on Friday at 215.1 points, down 0.7%. Meanwhile, the all-share index, which is also the BRVM composite, lost 0.7% to close at 194.12. Total value traded climbed to 198.3 million CFA francs. The currency for the region is trading at 505.6 against the US dollar, which now puts its year-to-date change at 1.23%. Let's move on to Ghana. The GSE Composite Index closed trading on Friday at 1,797, up by 0.1%. Now that keeps its year-to-date change at 49.8%. On the other hand, the GSE Financial Stock Index closed at 1,596.6, up 0.2%. Now that year-to-date change for that index stands at 53.5. On the currency front, the Ghana cedi closed unchanged at 1.96 to the dollar on Friday. Year-to-date change is now minus 3.3%. Now let's move on to the Nigerian market. We saw the NSE slip further after trading on Friday, losing 0.34% to close at 33,159.1. Year-to-date return now stands at 18.1%. Market recorded a turnover of 1.6 billion naira on 124 million shares. Volume and value of transactions were significantly behind March averages by 70% and 58%. Respectively. Let's take a look at the gainers chart. For Friday, we saw Ikeja Hotel, John Holt, and RT Briscoe gaining about 10%. We also saw QTix, Nimitz, and Air Service leading market declines with losses of 10% as well. Oil and gas sector recording largest declines for the day, with top three sectors being financial services, consumer services, and industrial goods also shedding some points. Now let's take a look at the outlook for this week with Kayode Tinuoye. Now Kayode is Strategy and Business Officer at a Diamond Bank, and he'll be joining us right now. Thank you so much, Kayode, for being on the show.
Thank you very much for having me.
Now, of course, the stock market has been volatile within a fairly narrow range recently, and a major reason being the mixed results that we've seen from the banks. Do you think that the market's reaction to bank results have been justified, considering that a few banks are still trading way below fair value?
Well, I think the market has priced in a lot of expectations about the performances of the Nigerian banks in the last few months. I think what we've seen prior to the release of their results is that a lot of investors took position with the expectation that the top-tier banks will come up fine. They haven't disappointed, really, and I think that a lot of that expectation has been met currently.
Now, of course, a major reason for the subdued interest in stocks has been the outlook for bank earnings. What, in your view, will be the key driver for earnings growth in banks going forward?
Well, I think in 2013 and going forward, we are likely to see an increase in lending for the banks. Recall that much of the earnings that we saw in 2012 came from earnings from yields on assets that are not risk assets for the banks. Now in 2013, we're going to see a lot more focus on loan growth for the banks, particularly when you look at the actions of the CBN in recent times, which seem to be in the direction where non-interest earning for the bank will be pressured. So we'll see a lot of focus on loan growth. I think that will be a significant driver of earnings for the bank. And again, we'll also see that the drive for financial inclusion by the CBN would continue to open the retail space for the banks to do more business in that space, and that will drive their earnings going forward. And lastly, I think also that the fact that a lot of the banks will make less provisionings this year, as most of them have practically wrapped up their legacy loan provisionings in 2012. Reduced provisionings will impact positively on the bank's performances this year.
Kayode, let's run through your outlook for the other sectors in the market. Let's start with the consumer goods stocks. Now, of course, most of them currently trading at pretty high PEs. However, they are viewed as defensive stocks, so I guess you would expect that. How do you see them trading from here on?
Well, I think the performances of the stocks have been very mixed. We've seen very strong earnings performances from some of them, and we've seen disappointing earning performance from a lot of them. I think the stocks appear overpriced at the moment, and investors will continue to take caution in investing in those stocks. But the outlook it may not be very robust in the sense that a lot of the consumer goods still have their input sources dependent on external on the commodity prices in the global market. For those that can quickly domesticate their input sources, that will impact positively on their cost of production, and that will make them do better. But I think that some of them still hold significant prospects, like flour mills, which is expanding very rapidly. Yeah.
Let's move on to the insurance sector. Should be in focus, of course, from next month as we start to see results released from that sector. Do you think that sector offers opportunities for investors willing to take a little more risk?
Well, I think when you look at the sector, fundamentally, there is a lot of potential when you look at the current level of penetration that we have in the insurance industry. Penetration rate is around 0.5% of the Nigerian GDP. When you put that in context of the imminent rebasing of the Nigerian GDP, you find out that 0.5% will pale into insignificance in the long run. So there is a lot of potential. But when you look at the expectations around their results for 2012, well, I expect some growth in premium because we've seen some progress in the compulsory insurance policy of the regulators. But I think a lot still needs to be done in terms of investor confidence in the sector. That will go a long way to impact on their performances going forward.